Hey guys, how you doing? I'm Kent Tilley, and today I want to sort of get mad at a commercial. I said I was going to rage. I'm not going to rage as hard as I did about that shady advisor, but I'm pretty upset about this. I'm going to rant about a commercial I just saw the other day from RBC. I'll show you the commercial in a second. Um, now, it's just a message, whatever. But before I get into the story about RBC and me, or at least this video, I need to tell you guys how RBC fits into my life. I think it's fairly interesting. My mom worked at Royal Bank when my dad was in medical school. My mom worked at the bank. My mom loved the bank, was guaranteed really good at her job at Royal Bank, and put my dad through medical school. And then they started the family, the 4Ks, the K4 that we have here. And always a soft spot for Royal Bank in my family. I was showing kids card tricks, my nieces and nephews, and my son. The other day, we were at my mom's house on these cool Royal Bank playing cards that we've had in our house forever. My sister has been working there for 20 years in the last 13 years. And we had lunch today. She told me that she's been a mortgage specialist there for 13 years. My sister is absolutely incredible at her job. She is a very, very brilliant woman and a brilliant mortgage broker that does right by her clients. However, if you've ever watched this channel, you understand that I'm not exactly that huge of a fan of banks. This causes some contention between us. This has nothing to do with the good bankers, mortgage brokers, investment advisors, wealth managers, anybody that's doing a good job in any one of these industries. This is not saying anything bad about you. This is always a message about the bigger picture, which is the bank. My mom also has been working for my sister for many years after my dad passed away. Once my sister got too busy, my mom's a huge fan of Royal Bank. This causes a lot of issues when sometimes I'll post something on Facebook and they'll see it and be like, don't talk bad about Royal Bank. And I said, I have to. Royal Bank isn't your friendly, neighborhood company anymore, even though I wish that banks were like that. Now, the other thing is, interestingly enough, the only my mom has like two really good old friends from the banking industry that ended up staying in their careers from when she started, and they got very high up into the banks, one at RBC, one at another one of them. And they are, in their early 70s and like pretty much every video that I post and article that I post, even if they're bad mouthing the banks in some cases when I post them on Facebook, because they have seen the changes. The other thing about RBC is that the very first $1 million client that I ever got when I was at IG, the very first, I never got one that invested $1 million with me. When I started K4, a few months in, I got my very first $1 million client. They're still clients to this day. I owe them so much. They have been so good to me. I hope they think that I've been good to them as well. And the thing about them is they gave me a very large portion of their money, even though she had worked in Royal Bank her entire career, knew a lot about money, knew how to get things organized, but wanted me to help with planning, and did me a very good solid in supporting some random guy off of YouTube's sort of channel, because she knew that I was telling the truth. There was a little bit of family connections and a really cool connection with this thing behind me. That is the view from my parents' condo in Kimberley, where they have a quarter share of this condo in Kimberley that my mom and dad bought. And these clients, until they sold it last year, owned another one of the weeks in that condo. We saw the same thing. Very, very neat story. I also have that tattooed on my arm. Very important to me, that spot, that client, big thing. Uh, I wish that the banks were like they used to be. I think banks are very important, but I think they have leaned the wrong way. And this commercial is just sort of supporting that for me. So I'm going to show you this commercial, and then I'm going to talk a little bit about it. And yeah, let's just see what it has to say. Okay, if I can figure out how to use this pretty soon. Ryan is going to help me get more organized with life here. Ryan's going to help us be cleaner with this crap. Okay. So he's obviously talking about Quest Trade because it says retire 30% wealthier in the commercials because you're not paying fees. Okay, now let's get back to me. What did we hear there? Okay, so this is them fighting against the low fees. Fair, of course they have to do it, but instead of doing it by saying we are offering really good advice, we are suggesting that you're going to get better performance if you invest with RBC instead of them. How do they know that's going to happen? They don't. We have absolutely no idea which investment manager is going to do the best. All of the lines, and I'm going to show you another graph in a little bit, move in the same direction. You are paying for a few things when you invest your money. You're paying for an investment manager. So at Quest Trade, there's an investment manager that builds portfolios out of ETFs. At Royal Bank, there is an investment manager that builds a portfolio out of mutual funds. And the mutual funds are managed by portfolio managers instead of being ETFs. So they cost more for the investments alone. Now, where Quest Trade doesn't charge is that they don't have an advisor on top of that. So Royal Bank is adding an advisor fee and basically a Royal Bank profit on top of that, which is why you're paying more, which is why it's a little bit more unlikely that you are going to have worse performance over time because you're just paying 1% more. Now, the thing that you need to understand here is that 1% is supposed to be so that you are getting really good advice. Otherwise, they're going to be apples to apples. One of them is going to win a stretch for a few years. The other one's going to win a stretch. But I guarantee you, they all move in line with the market based on the risk tolerance of the portfolio that you own. I don't know which one is going to win. If I did, then I guarantee that I would tell you to go into that one. I would. Why wouldn't I? Why wouldn't I want my clients to make more money? There's nothing about selling products when you're planning for somebody. It's about making your plan work and making the right decisions, and investments is one part of it. And the only thing we can control there is the risk you're taking. And, we can't control your time horizon. You've got that set. The risk you're taking and the fees. So if we cut your fees lower, that's a plus. It does not mean that it's going to win. And they're suggesting that you're paying more and you're still going to win. And they haven't once mentioned any advice. And that is where they're failing right now, is they're failing at the branch level to hire good advisors to give good advice. They don't have it anymore. They have good advice at the wealth management level, but they do not have good advice in that level that's so important to make the right decisions. And that's where we are focusing right now. do not get sold on performance right now. Because let's just look at this. I want to show you another screen talking about performance. Why don't we talk about performance then, RBC? And you can ask any one of my clients, if we've ever had a meeting that talked about performance. Not since I started K4. You could ask, I'd be like, I don't know. I've never looked. Look yourself. I don't care. Hopefully it does well. I want you to. I know it's not doing well right now. I can tell you that much. If you're worried about it, let's talk about it. Let's see if your plan is still on track. Let's see if there's some changes we can make that make you bulletproof. The only thing I care about right now with regard to investing is, are you bulletproof? Can you support yourself if shit hits the fan? Because it's going to. That's it. It's like, are you ready for this? And a lot of people aren't, because a lot of people have been put in really bad financial positions by the bank that just tried to sell you on performance, because they're doling out debt at an unsustainable level that is not going to be able to continue to go. That's it. They did it. It wasn't us. It was them. We'll start looking. It wasn't the advisors. It wasn't the good bankers. It wasn't the good advisors. It wasn't the good tellers. It wasn't the people. It was the system. That's it. It was how it was going. And if you watch, when it starts to hit the fan, when real estate starts dropping because people cannot afford to live there, what I want you to watch is if they start putting money back into RBC to train better advisors, or if they start cutting out human beings. And then what I want you to do is switch and say, now I'm going to go support local, because companies like mine and other ones that exist are not going to be cutting staff if we can avoid it. We're going to try to continue to grow because there's a market that needs it. And we're not going to sell on performance. We're going to sell on planning every day. If you want performance, go somewhere else. I don't want to talk about it. And nobody that works here is going to talk about it either. All right. Now let's go back into the sharing screen. You can Google any fund you want. Basically, so I wanted to Google the biggest fund in Canada, which is RBC Select Balance Portfolio A. It's their biggest fund. They have, if you can see here, let me make this bigger. Ryan, you got to help me be better at this. Okay. So they have an investment size of 44.7 billion. They have a management expense ratio of 1.95. That means you're paying $1,950 a year if you have $100,000 invested with them. I hope you're getting good advice for the $2,000 you're spending every year in fees. And don't worry about all this other stuff. Whatever, doesn't really matter. Now let's look at these three lines. You've got the blue line, which is the RBC investment line. See how it's right in the middle, doing pretty good. See how they're all going in the exact same direction? See how they all move exactly how the market moves? See how it has really absolutely nothing to do with which one it is? Now you've got the red, that's the index, that's what they're fighting against. That's the benchmark that this fund is trying to do. That's what essentially a grouping of ETFs is, that is built up of ETF index funds that are the same balance. So there's going to be a bunch of them in there. So this isn't like one particular fund against, it's not like the TSX versus RBC's Canadian equity fund, because there's way more pieces in here. So that's why there can be bigger volatility between them sometimes. And then there's the yellow line, which is the category, which RBC has outperformed the majority of its competition. In this fund in particular, sometimes there's bigger spreads for a while, but generally speaking, these kind of go back to the norm. And you can see that basically where you're invested is almost a moot point, or however the hell you say that. I have no idea how you're supposed to say that. But then I think it's kind of funny that they're like, performance matters. And you're like, does it? Because if, I don't know, year to date, it looks like the RBC investment is down 15.5% compared to the category, which is down 13.5%. So, I mean, they're down an extra 2% this year. Is that really good? Is that the performance you want to sell on the short-term basis? Or is that what you're doing? I hope you're not doing that. It's nice to show people long-term averages of what they can hopefully expect, but you have to understand that this whole stretch from 2012 to 2022 was a piece of the largest bull run in the history of the world. The largest bull run. When I started in 2011, everybody was like, the market sucks, hasn't moved for a decade, everybody's garbage. The other thing that everybody told me was, don't invest in the United States, invest in Canadian banks. Well, that was also a huge mistake, because the United States just absolutely crushed for the last 12 years. The returns of the S&P 500 were just absolutely massive coming out of the 2008 correction. But when I started in 2011, everybody was like, avoid the US at all costs. So it just goes to show you that everybody knows exactly what they're talking about with what's going to happen in the future. Now, this is one that I'd say, okay, this actually kind of matters. The 10-year return, if you're comparing anything, you can say, okay, the RBC investment did 5.63 over 10 years. It's down 15% this year. That's not bad. That's higher than any rate of return that I show in our software analysis retirement plans ever. I don't go above 4.5%, even if anybody wanted me to, because I'm like, I want you to be bulletproof. I want to show that it's working, that we're on track. If you have too much money, I can confidently tell you to spend more. The category is done, 0.9 or whatever less. Still close. Some funds within that category would have been garbage. I'm not necessarily saying to move out of them. And the index just kind of beat the investment at RBC. But what you have to realize over here with the index, which is what I would have told you to invest in, if you're paying a firm like ours, say 1%, for example, for the advice, then RBC actually won. We got 4.93 and they got 5.63. So we beat the category, but we didn't beat this one individual fund. And that will happen all the time. But generally speaking, the index wins. Now, I don't know that it's going to, but what you can invest any way you want in the index and then find advice that is going to make up the difference. If you're getting good advice, you can make decisions that are actually beneficial to you. And that's it. It has nothing to do with chasing performance. And what's happening right now and why the market is just in such a wild state of everything is because people have been chasing and gambling and borrowing and doing crazy things, chasing quick performance. And all of these billionaires at the end that are like, this is how you invest to make crazy amounts of money. Let me tell you how I got so rich. Not telling you that they started on their journey investing 20 years ago, and now they're getting basically ultra rich at the end of the game. That's it. That's all that's happening. And so do not chase performance, chase good planning and advice. Find it, find somebody you trust. If that's us, reach out. We can do a $500 financial plan for you. We'll look at your investments. I'm not saying that we're not going to talk about them, but all I really care is, are you getting value for what you're paying? And if you're not, then I'm going to tell you, well, you should switch just because you're going to get better value over here. That's it. It's value for what you're paying, and we're going to charge you less than that. No matter what, nobody would pay more than 1.95, and people with a lot of money are going to pay a hell of a lot less than that. Nobody will actually pay us over 1.8 in total, all in. But once we get over $200,000, we cap out. That's what we earn as financial planners, which is 1.2% to K4. So $200 a month per couple for advice if you choose to work with us after we've done a $500 financial plan. If you don't see value in the $500 plan and don't want to move, don't do it. Doesn't matter to us, because somebody else will come that will want it, and we want to help people that we all feel like the relationship is mutually beneficial. If you're not feeling that way, then we're not going to feel that way. And it's an anxious job, working with people's money and having them trust you with it is very anxious, and we don't like these times. We hate them. We just, want to make sure that you're making good decisions so that you don't fail. That's all we're trying to do, and just make sure that you're comfortable and you can sleep at night. My favorite conversations are telling people when they're stressed that they're going to be okay. And that's my favorite value that I give. So anyway, thank you very much for watching. Please subscribe if you haven't. Please like, please comment, and if you'd like, reach out to us for a $500 financial plan. You can watch the video and learn more. Info@k4financial.ca. Cheers.